Hey guys, Mike here. So another fun day in the market. Let me tell you, plenty of volatility, and so we'll go into what causes this volatility, what the bond market is pricing in now, and what's causing something else that you probably aren't even noticing, along with some stock charts some of you even requested, as well as the futures and the indexes. But you can see right here, it's all about the job market, right? So we had U.S. job openings. You can see it continues to decline, came in lower than expected. But what has I always told you? What was the norm? Okay, so we are almost back to where it was at the peak in 2018, 19. And you can see where 2015, 16, and 17 were. So somewhere in there is the norm, right? So we are reverting back to the norm. And that's what you would expect to see. But it came in much lower than what they expected. Again, I don't know how to calculate this stuff because I can't imagine these are actually accurate numbers either way it goes. But when you look at jobs quits, this is something we actually have reverted back to the norm on. If we draw it back, you can see right there, all the way back to 04, 05 levels. We're actually below 2017, 18, 19 levels. And of course, you would expect the unemployment rate going up, the job quits rate would actually be lower. So what you don't want to do is get below like 2. You see when it's 2 right here? That was a .com. Below 2 was 08. Below 2 was 2020. So you don't really want to get there. That's not a good thing to see because people literally can't quit because they don't have any jobs to quit. That's kind of how I read that. Now, what is all this data doing and some data if any got tomorrow going to do? It's this right here. These rate cuts. We know we're going to get one in September. It's almost guaranteed. But look at what the 50 basis point rate cut is doing. It's going back up. You can see right here, the 25 basis point rate cut went from 62% yesterday. Now it's down to 55%. That 7% swung on those job numbers. Now it's up to 45%. The reason why it's a big deal is because usually 25, the market just kind of chugs along. You do a 50 basis point cut, it can kind of freak the market out because they think, oh my God, you're behind. That's why this job data really actually means something. That's why inflation data has been pushed to the side and the job data is up front. This is what the Fed usually breaks, and if they're too late, the job market is already spiraling down, right? And you can see tomorrow, what do we got? ADP non-farm employment change. That's going to be the big one at 8:15, not 8:30, 8:15. Unemployment claim is going to be another big one, okay? So those are the two people we're going to be looking for. Later on, after the market opens, final services PMI, ISM services PMI, crude oil inventories will be a big one. But it's all about the payroll data. Does it show, oh my Lord, they're too late, or they're definitely going to drive us into a recession type stuff? That's what you're looking for. And that could be why you see right here the U.S. bond market options volatility. You can see it spiking again. We talked about this before. Again, when this spikes up, that's usually the market going, uh-oh, not good, because they don't want to see volatility in anywhere near the bond market, right? Because the bond market is everything. There's no stock market without the bond market. So you see the VIX spiking. You're seeing this starting to spike back up. And when you look at it, what I'm talking about is, I'll put the SPY over this for you. This right here, look right there, it's spiking hard. What are we doing? We're crashing down, okay? This right here, where are we at next? You can see right here, it's spiking up. Market's either going sideways or down again. And then, of course, when it drops down, the market goes on a nice big rally, right? And so we just went through this when it spiked there in July and August. What happened to the market? The S&P dropped almost 10%. Okay, so this is not something you want to see. This is the kind of stuff you'll see before a recession. It'll spike much harder than that, okay, and freak the market out. I will say on a side note, because I like passing on things that I come across or somebody shares with me and stuff, and maybe a recession indicator needs to be cigarette companies. Why do I ask that? Because here you got Altria, and look at this. The gray shaded area right there, that's a recession, okay? I think that's gray, I'm colorblind, but the shaded area is recession. Look what it does going into recession, right? It runs all the way up. And so I went back all the way to the 70s on this. Look at .com. It runs all the way up into it. Now it's going to drop because it's a stock, right? It's like everything else is, okay? But look at it. Here's 91 or whatever date that is. Just look at all the shaded areas and look what this stock does. It runs up into what is the official recession, okay? We won't know the official recession until like a year later, but it don't matter if you pull up this one, Philip Morris, there's another one somebody put me on to. I think it's maybe an English company or something. But for whatever reason, I just noticed that and I'm like, well, dang, that goes all the way back to the 70s, right? And this is what I'm talking about. I'll pull SPY up here for you. That's SPY. The market is selling down way before this one starts to sell down, months before. Okay, that's what I'm saying. Maybe it could be using the recession indicator. I don't know, because you can see .com, we're selling off months, almost a year in advance of this stock. And there's certain stocks like usually apartment complexes, self-storage unit stocks, cigarettes, I guess, another one now. So I'm going to put all three of those together. It kind of tells you, and then if you start to see the stock so really running up and the market starts to sell down, not a good sign. So I just want to share it with you, get your thoughts on that. Now, looking at the futures NQ here. You can see obviously another red day today. They started to spike it up. It had several drops, all this fun stuff. Still in this megaphone channel, coming into what? A daily fair value gap it touched into. It touched the bottom of that megaphone channel and also the 0.5 fib. So a lot of confluences there, right? So do we get a bounce? That's the big question. Are we going to get a bounce from here? Start moving back up to the top of that channel, see if we can break it. That's what we got to figure out here, because we keep having these red days. And it's only going to take like one good job before, I think, to maybe where you see a spike. We'll talk about why in just a second, because obviously some other stocks are under pressure. But when you look at the Qs here, what's happening? It's below 50. It's below the 100 now. It's got that gap right down below right there, just right below it. And so not a good sign for the Qs. Of course, it's looked more bearish than the SPY for quite a while, right? It's been lagging. And so now it's about 7-8% off all-time highs. But when you look closer, this is why it's important to recognize trends, right? We had the trend going up, broke that. Now trend's coming down. So we are in this downward trend now, and a lot of pressure coming onto this. Again, whether it's from the carry trade, whether it's from recession worries, whether it's just the fact we're in September and September sucks, even though the first 2 weeks are supposed to be okay. You know, it's like in an election year, the green months in September are like 40% chance it's green, 60% it's red. October is horrible. It's like a 14% chance for something to be green. So we'll see if this carries out. And of course, some of the stocks that could affect this, like Tesla, for example, right? Pay attention to stocks like this. It was up 5% today. I don't care what was going on in the market. It just stays steady between 4 and 6, somewhere in there, right? Big green day. Of course, what was going on? What do you think I'm going to show you? It started having those call sweeps roll in. Actually had a mixed order, a mixed bag, really, right? A lot of call sweeps coming in, put selling coming in, some block orders coming in for calls. And so, you know, that helps Tesla. Tesla will not have big moves without the option market pushing it higher and higher. That's just the way it is. I hate to tell you that, but that's just the truth. I think we all know that by now. That's why you see NVDA lagging. You don't see no kind of call sweeps coming through for NVIDIA right now. And so when you look at this, it's above that 200. Okay, it bounced off that right there. It's above the little gray shaded area. It's trying to get above that trend line, and it's trying to do what? Form a short term now, like channel going higher. So maybe it'll hit the top of this little channel, but what everybody's waiting on, and we talked about this to a blue in the face. We'll see if it ever hits. There's your low, your high, your higher low, and so maybe it sets a higher high right here. But the big thing everybody's waiting on is just one little push, and you almost guarantee everybody's going to sell at this point, is to push right up here. One explosive move up to 233, 235, somewhere in there, right? Which would put you to what? If it happened now, that would put you right where you're going into the real weakness of the second week of September. So we'll see if it happens. Okay, let me know what you think in the comments. Now, clearing NVIDIA's chart off, kind of going at this a different way. It's in this triangle formation. Obviously, we got 1, 2, 3, 4, 5, like 6 touches on the top, right? Heading down, right? Busting through our shaded areas once again. Here, only got 2 touches. Looking for a third touch. Does it come back down? And by the way, they came out today and even said that news about them getting subpoenaed is not true. What really shocked me, though, is it didn't move in after hours like I thought it would on that news. Remember, that's what drove it down after hours yesterday. But you can see a lot of confluence where that trend line is going to be, right? You have the 200 right below it. Obviously, shaded area, which has been support multiple times before. Also, it's the golden pocket right there. Okay, so nice, 3 different things for confluence right there. If it does fall through, you'll have the 0.79 right where, close to where the 200 is. If this, bearishness continues, when you look at the momentum, maybe it gets a bullish, the Cascars cross on the daily right there is kind of what you're looking at. But the weekly is like, woof. I mean, you already had a bearish cross coming back down. And the RSI, look at the weekly here. It's right on that 50 line. It has not been below the 50 line. You got to go pretty far back to actually figure this out. Way back here to like 2022. So it's been a couple years since the weekly RSI has been below 50, right? And of course, 2022, what was going on? We were in a market crash. So, big thing here. So it has to hold right there. It has to get a bounce. Our bears will take over on a much higher time frame, which you do not want if you're a bull, okay? Now, Amazon's an interesting one here. We talk about trend line and everything else. It's bounced off of 200 once again in that shaded area, but what else do you see? Anybody spot it? Right here, this downward trend line, we have 1, 2, 3, 4 rejections off that thing. It cannot get above this trend line. I'm actually going to pull it out to this other trend line right here, this ascending trend line. And when you look at that, the question is it finally going to try to break through? Because if it does lose the 200, you can almost bet money what? It's going down to the next shaded area, which is also that ascending trend line up, which has been support for quite a while. And so, that's really the big question. But if it can break out, then, looking at 183, then 188.50 is really your levels to watch. but it just doesn't seem to be able to do it. The Mag 7 is getting held down right now because of rotation. Back into utility stocks, back into cigarette stocks, whatever you want to name it, the defensive plays, right? And when you look, I'm only even going to draw a trend line here. So now you got the 200 moving average plus this trend line, because we have bounced off this trend line like 5 different times now, trying to head up. So you could cause a small wedge into an explosive move up, or a nice breakdown down to the shaded area, which will put it between like 160, 164. Kind of keep that in mind. Now, a couple of stocks you guys asked me about. One was Celsius. This thing right here is a hot mess. Told you, it's momentum stock, right? Where's momentum? There ain't none. Well, I'm sorry, there is some. It's to the downside, okay? What happened today? You might notice it was down double digits. Well, your CEO come out and said stuff you don't want to hear when you're already in a downtrend. Talked about Pepsi cutting back on their orders, around 100 to 220 million worth of orders to be exact. And so that's not a good thing. It's not what you want to hear, all right? Then their CFO went on to talk about how the fact that was going to happen, and that was going to affect what? Q3 margins, okay? So Pepsi doing that's not a good thing for them. And so that's why this one has momentum, all right, but it's to the downside, unfortunately. And when you look at it, you know, going to the weekly right here, you can see it's just dead. Like you need some push up. You know, how low can it go is the question, right? And so, you know, this one right here needs some major influx to go on, because here's the thing. This thing is not only broken all with moving averages, it actually broke the weekly 200 moving average. That's not good, okay, at all. And there is support below this, of course. And, you know, but that still means there's room to fall, right? That's your weekly 200 right there. That's your weekly 100, weekly 50 is above it. All the other moving averages are way higher than that. So again, hot mess of a stock is what it is. But that's what happens with these momentum stocks, right? They go up like crazy and they go down like crazy. The momentum goes in both directions, okay? And when you look, you know, where can this thing drop to? If it continues to drop, there is a decent line of support like right down here, and you can clearly see it. I mean, it sticks out on the chart like a sore thumb. But, you know, it can fall down to that right there, which is around 27.45, where it's bounced multiple times in the past. That's still, you know, a little bit of drop down if that's the case, okay? So, you know, maybe it'll be like all the rest of these. It finally drops enough where they go, okay, we'll start buying it up or whatever. But, you know, we'll have to see if there's any love for the energy drink sector or not. Now, SMCI was asked about. You see this one is another stock that's just a hot mess. Absolutely been destroyed. It's setting at its 100 weekly moving average again, all right? Why do I not use the regular moving averages on it? Because they're way up there. And you also have if I'm not mistaken, a death cross. That's a 50 crossing the 200 to the downside, so that's never a positive thing. This is after the stock has lost like 68%, I believe it is. And so this is another one. And of course, what happened to this one was simple. It had a short report put out about it, for those who don't remember. And there was 3 companies that had short reports put out about it. And you can see clearly right here to the right where it says performance sent short reports. Well, Supermicro and whoever, Symbiotic Incorporated and Lumen, not been doing good. I haven't seen short reports in so long. You remember they used to be a big thing in 2020 and 2021, and they started cracking down on them, I guess. But, you know, maybe this one has merit. I don't know, because remember the day after is when they came out and said, oh, we got to talk about basically how we do accounting and our disciplines and rules. So that was not what you want to hear after a short report, talking about you cooking the books, basically, okay? And I'm not saying they are. I'm just saying that's what they said. They needed to work on the rules and figure it out, and they delayed their quarterly report. Not good. Now, of course, we've talked about this before. We showed it. If it falls down here into this volume gap, it can fall between like 300, 375, somewhere in there, where you could see it maybe catch a bid. But, you know, I'd say 350 is your safe bet. But again, we'll have to see, because this is one of those stocks. Remember, I told you when they get down this far, it's down like almost 70%, I believe it is. And you start pulling the fibs on it and stuff, and you get this combination of being hammered down plus sitting at a major fib, which is at the 0.79 fib or a golden pocket fib or something like that. You've seen a lot of them bounce, okay? This might be one of them. It is, you know, in the semiconductor realm, so we'll have to see, because right now that bubble's getting kind of smashed around, or I don't want to say bursted, but definitely smashed around. Now, more earnings coming out tomorrow. Neo, Broadcom's going to be a semiconductor, and this is one of the ones that if Broadcom comes out good, guess what? You see that thing lift all boats, right? UiPath, DocuSign. And so let me know what you think about those and how that's going to play out. But just watch the job number in the morning. It's all about rate cuts and recession fears and the bond market and all this fun stuff. And so that's what we're going to pay attention to, which means that's what I'm going to inform you on and see how it goes tomorrow. because that is a big report and all eyes are on it for sure. So as usual, please hit that like and subscribe button, guys. Really appreciate it. Always like reading your feedback in the comments. For those who watch and stuff, feel free to sign up for the membership. You see what you get right there and listen to McDonald's combo. And I will see you guys tomorrow.